Everyone, here's Gilles again from Chemex Capital. Today we're going to discuss about a very interesting topic. This topic is risk and reward. What is risk and reward? We're going to discuss about it and I'm going to show you how to apply it in your Forex trading capital account. First, we're going to start about defining risk and reward. Risk and reward is generally defined as the relationship between the amount of risk you are willing to take against the amount of reward available. And usually it's expressed as a ratio, right? In a ratio form. And if you say 1 to 3 risk and reward, it means the investor is willing to take 1 unit of risk for a potential 3 units of reward. And if you talk about in dollar value, let's say for your forex trading account, if you're willing to risk 1 to 3, it means if you have a risk and reward ratio of talking in the general definition perspective, right? 1 to 3 risk and reward setup is like you risking $1 against potential profit of $3. So that's the general definition. And on trading, your risk is your stop loss point times your position size, and your profit is the take profit point times your position size. So it means if your stop loss point is 1,000 point and your profit is at 3,000 point, that's how you achieve the 1 to 3 risk and reward. Because if you make, let's say you're trading a volume of 1 times 1,000, it's going to be minus 1,000, and if you profit, it's going to be 3,000 point times 1,000 times 1, sorry, is going to be $3,000. So here you will achieve your 1 to 3 risks and reward by risking $1,000 for every unit, $1,000 for $3,000 profit potential. And it's a very wrong way to say and from experience, it's a very wrong way to express the risk and reward in the forex trading business. Why? Because first, it's very hard to achieve. It's very hard to achieve. And second, you achieve your risk and reward over several trades, not only on one trade. And people who have been trading for a very long time or for a relative long time, they can relate to whatever I'm saying. And just putting $1,000 at risk and expect 3,000 is very unrealistic. So, however, I'm gonna show the right approach in this video. In the right approach, you have to consider the probability effects, right? The probability effects. Why? Because trading is a probability game, and everything is weighed down or weighed up with the probability of your edge and your way of you trade. And now I'm gonna take some example to illustrate whatever I'm saying, to illustrate my point, to demonstrate whatever I'm saying. We're gonna stick with the 1 to 3 risks and reward setups. And on the first case, we have a stop loss point at, in this case, I'm not going to use point. I will just take straight the dollar value to make it easier for all of us. So let's say in the first case, the your stop loss point, let's say your risk is at minus 1,000 point, all right? And then you have the take profit at $3,000, right? So there is your 1 to 3 risks and reward setup. And good, sounds good, all right? But what about your probability to achieve that result? How how is it probable to achieve to only risk $1,000 and to achieve actually $3,000 on only on a single trade, or even on a couple of trades, but with that standard setups? How do you achieve that? And for my opinion, the feasibility is very low. I really doubt you can have like even 50% chance of achieving that kind of result. No, regardless of the trading techniques you use. The reason why is because the forex market is very volatile, and the volatility implies the market can make like 10 points movement against yourself before giving you a potential profit. Now I'm gonna talk about the second case, right? The second case, you're gonna still have the same $1,000 at risk. So it means like if the trade goes bad, you have lost $1,000, right? And now let's say you have only $200 profit, right? But in this situation, you take into consideration your probability factor. And now let's say your probability factor in this case is 90% of winning. So, and 10% probability factor of losing. So it means if we'll take a sample size of 100 trades. It means on over 100 trades, if you have 10% probability of losing those $1,000, is going to be 10 trades. So in aggregate, it's going to be $10,000 you losing. Now let's discuss about the second scenario. On this second scenario, we're gonna use the probability factor on our trade, and we'll use a sample size. Now let's keep the same $1,000 risk, and now let's have $3.50, like $350 as our profit target. But in this situation, we are considering the probability factor, right? So let's have 100 sample size. So we're gonna use it on, because when you talk about probability, you gotta have a sample size, and let's use 100 trades for this example. So and let's say in your probability factor of reaching that goal of risking $1,000 for $350 profit, let's say the probability of achieving that is 90% accuracy, right? So it means on over 100 trades, you are risking to lose 10 trades, and you have a 90% probability of winning the 90 other trades. So now let's do the math. So over 10 trades that you risk to lose, and $1,000 is going to be $10,000 losings, right? That you risk. And now let's talk about the winning part, right? Now let's say you have 90% of achieving $350 profit, right? So it's going to be 90 trade winners times $350 profit. That's going to give you $31,500 profit, right? So now let's summarize. It's going to be the total 10,000 trade you lost on 10 trades is going to give you minus $10,000 losers. And now if you win the 350 90 times, it's going to give you $31,500, which gives you almost the same risk and reward ratio of 1 to 3, but in this instance is going to be 3.15, something around that. So you still have the same risk and reward, but with much lesser profit target on a single trade. But the bottom line is you use the trick is you use your probability factor in your advantage. So now the key challenge here is to have a very good probability of winning, right? You gotta have the challenge. The challenge here is now you gotta have an edge that gives you a strong probability of achieving your profit target goals. So it's gonna be it for this risk and reward episode. Thank you for watching. It was Gilles from Chemex Capital. If you have any question, don't hesitate to drop it in the comment section below, or you can reach me out through my email address on the description section below. Thank you for watching. Have a beautiful day and beautiful trading journey.